Hello, everyone. Good morning, good evening, good afternoon. Thank you so much for tuning in to day two of Financial Inclusion Week. I am Gayatri Mehta. I'm a director at Axion International. I'll be today's moderator for our panel session. I hope you guys have been enjoying all of the great session that's been coming in from yesterday and a lot of the content that'll be pouring in over the next few days. Quite excited for today's conversation. It's a hot debate topic, I think, across many institutions globally that are participating in financial services and bringing access to financial services globally. I think a big content and focus for Financial Inclusion Week is a lot around transforming financial services for the future. And how do we make them more convenient, more accessible, more affordable for the millions of low-income individuals, microbusinesses globally? And in today's session, we'll be focusing on group lending specifically, right? And looking at how this decades old model that has really pioneered access to a lot of financial services for millions of individuals globally has actually been weakening over time, right? And created limitations for a lot of institutions. And how do we think about creatively innovating group lending today while maintaining some of the most important aspects? And quite excited to invite a lot of the experts that are kind of sitting at the forefront of this innovation, at the forefront of really driving access to financial inclusion for the millions of customers that they serve. We'll be zooming into Indonesia, but I think that a lot of the content in today's sessions will be relevant quite globally. And so we'll be able to sprinkle in a few global examples as well, but focusing a lot around group lending and evolving this model today. So as mentioned, it's a decades-old tradition. It's been around with us since the 1970s, from the green banking style, and a lot of institutions have adopted group lending because it's really helped bridge that financial access gap to bringing credit to especially new to credit customers around the world. And in Indonesia alone, we have 65 million micro business owners, of which the majority are women, which are oftentimes the most hardest hit segment, the most vulnerable segment in being able to access these financial services. And group lending has really helped pioneer these efforts in creating and bridging that access gap. But it has been weakening over time, and the structure has really stayed rigid over the years and not necessarily evolved despite the evolving needs of the customers that we're serving. It's a templated solution. The model is quite rigid and inflexible in terms of really catering to that individual needs and preferences. And so institutions around the world and really everyone is starting to ask, how do we evolve this model? Is this really the way of the future as we think about digital transformation, transforming financial services, access to data, access to technology? What can we do with these new innovations and solutions that are happening to really evolve this decades old model to serve and better serve the needs of the customers? And so we're going to be diving into a range of topics. We'll be looking at the use of data to help build individualized risk profiles. We'll be looking at how do we curate and change this model so that we're tackling individual personalized needs without actually weakening or deteriorating the community structure that group lending does bring to a lot of the customers and the institutions that serve them. And of course, the infamous role of technology, right? The do's and don'ts. Technology is extremely powerful, but we're working with offline communities. We're working with individuals who don't always access financial services digitally. But how do we think about, as institutions, how do we think about the role of technology, the benefits it brings us, but also the limitations that we play? And I think, we're really, really lucky to be kind of welcomed here by these three panelists because they've been sitting at the forefront of pushing forward this change. I think they've also seen a lot of the failures as you look to innovate these models, what works and what doesn't work. And I think they're really excited to kind of share some of their learnings with us today, and also the ambitions for the future, right? The perspectives of where are we going as we look to continuously serve and enhance the financial health and resilience for low-income individuals, micro business owners, especially women within this space. So with that, let me go ahead and introduce our panelists. We have Arya Widyanto, who is the President and Chief Risk and Sustainability Officer at Amartha. Amartha is a P2P fintech, a leader in microlending in Indonesia. Arya, I think you guys have now serving more than 2.5 million micro businesses. 100% are women, especially in, let's say, the most vulnerable segment within that, which are the ultra micro business owners. And impressive, I think you've dispersed $1.3 billion to date, right, already across 72,000 villages. So obviously Amartha is a huge player in this space. Arya wears many hats in the organization. He has been with them since inception, has a lot to discuss on this topic, especially given that Amartha has really proliferated group lending in that model, but is looking to innovate and continuously innovate their practices. Next, we have Pak Amam Sukrianto. He is the Director of Small and Medium Enterprises at Bank Rakyat Indonesia, which is BRI, the largest commercial bank in Indonesia, and very impressive. They serve over 30 million customers, have a huge, huge influence in the entire nation, and really a leader when it comes to financial inclusion. They specialize in microlending. And Pak Amam, you've been sitting with decades of experience and looking at how did we start and how are we constantly evolving and innovating BRI's practices in the space from the perspective of a large commercial bank. And our third panelist is Roma Vasudevan. She is a senior director at Axion in data and digital lending. Roma is leading several digital transformation projects globally in Southeast Asia and Africa. I think Roma's been exposed to the most traditional of group lending institutions to some of the most innovative of group lending institutions. So a wealth of experience there and a lot to share on this topic. So thank you so much, everybody, for joining this panel. And let's dive in. And Arya, let's actually kick it off with you, right? I think you, sorry to pick on you, Arya, but you are sitting at the forefront of a lot of this change. I mean, you're sitting with the largest P2P microlender for women micro business owners in Indonesia today. Obviously, you guys have kind of really taken that Grameen Bank group lending model since inception. It's been Amartha's core bread and butter, and pushed that forward to get to the successful stage that you're at today. But over the recent years, especially, you've really started to make changes in your practice, in the way that you're serving customers and the experience that you're giving to customers. And you yourself say, Arya, that group lending, it's becoming obsolete and we need to innovate. Yeah. So I'd love to hear from you. What are some of the bigger challenges that Amartha has really been hitting as you guys have started to really scale and push group lending forward? What are some of the things that Amartha is already doing in the space? And Amartha is super ambitious, as we know. What are some of the plans for the future, right? The vision for the future in terms of evolving group lending, but making sure that you're still staying a relevant leader in the microlending space today.
Right, thank you, Gayatri, and hello, Pak Amam, and hello, Roma. It's good to see you here in this forum today. Yes, you're right, Gayatri. So we've been pioneering the peer-to-peer lending as a fintech, but we also have strong missions to promote financial inclusions, and therefore we deliberately choose our customer segment who are women, and also the ultra micro and micro entrepreneurs, especially those living in rural areas. What we see in the middle of digital transformations today in the information age, there are challenges as well faced by these women living in rural areas, especially those who started new businesses as the micro entrepreneurs. One of the challenges that we see from this market is that there are limited financial literacy. Financial literacy is not only limited to how they manage the day-to-day financial activities from their businesses and personal activities, but rather on how to understand the financial objectives as an individual, as a woman, and also as a family. And what are the available tools to help them achieve those financial objectives. So number one is always about literacy. And number two, because we are in the information age, of course, we are faced with the challenge related to the digital infrastructures, not only physical infrastructures, but also the digital readiness on how these women, these micro entrepreneurs could, utilize technology to promote empowerment, and also, in particular, increasing their income and also upgrading their business conditions. And last but not least, I think the challenge also related to the unavailability of the appropriate products. For instance, if you are an ultra micro businesses in the villages, you might need very small loans, typically around, let's say, $200 or $300. But apparently, not many financial service providers, especially banks, have those products, available for them. So those are also the challenges that are being faced by these women, and therefore Amarta started to solve those problems by offering affordable and flexible working capital loans for these women. And maybe I'll touch a little bit on the specific topic: why women? Well, Indonesia has over 60 million micro, small, medium enterprises, right? And then half of them are operated by women. But unfortunately, because these are ultra micro and micro, so there are micro, but there are also layer below the micro, which is ultra micro. So typically informal businesses, and therefore, from the point of view of conventional banking systems, they are not bankable because of many limitations. And therefore Amarta put ourselves in the positions of serving the pre-bankable customer, so that those people can be served through the financial services that Amarta provided. And these are the intended missions of Amarta, to be more inclusive and also serving the niche market of the unbankable. But this opportunity is also comes with a challenge, as you mentioned earlier, Gayatri, that by adopting like Grameen model group lending, there are limitations, especially when we are talking about Indonesia is an archipelago nations where we have over 17,000 islands across the equatorial line, very limited infrastructures. Therefore, we think on how to crack these challenges, and technology is the answer, and that's how we continually digitize our operations internally, while also externally we help transitioning these women in the villages, onboarding themselves into the digital society. That's what we're currently doing. We also learned from the pandemic that there are push for us to digitize the society rather quickly, because during the pandemic, there are movement restrictions where we could not interact to each other physically, and therefore the backbone interactions and financial services will rely on the availability of digital financial services. So that's one of the motivations for Amarta. We are started as a conventional group lending, brick and mortar microfinance, and then gradually we move towards a more digitized process by establishing a peer-to-peer lending platform, by digitizing ourselves while also digitizing our customers. So started by like developing an apps which is specifically designed for women, which is very intuitive, simple. We develop also our credit scoring systems, where we position ourselves as the pioneer in establishing algorithm where we could underwrite the loan using alternative data. So even without previous credit history, previous like digital footprints or any documentations or collateral, we've been able to understand the credit worthiness of these particular persons, and therefore it removes the barriers of those women, micro enterprises to be served by the financial services. And with the growing technology and thanks to the partnership also with Axion, now we've been able to develop behavioral score for the renewal loans, so that it could help us optimize those who are creditworthy, high quality borrowers, so that we could be able to retain those customers. Because as you know, retention is a lot cheaper than acquiring new borrowers, right? So this kind of innovations are the one that we are looking for in the future, because you're also mentioning about our future ambitions. Of course, we are planning to have a full-fledged digital financial services. And later on, because we have Pa Amam here, we will talk about collaborations, right? But from our point of view, because the benefits of doing fintech is we are more flexible, we are more customer centric. So what we are aiming to achieve in the future is that we could provide a seamless user experience for our customer borrower, but on the back end we will have support from banks as well. So we will talk about the partnership later when we move towards the partnership element. But I will end my remarks there. Over to you
Thank you.
again, Gayatri.
Thank you so much, Arya. Thank you. And I think you touched on some really important themes that make it very easy, right, to transition into some of the next topics that we want to talk about. I mean, the piece on flexibility, especially, Arya, is how do we introduce flexibility into our offerings? How do we think holistically, more holistically about the financial services we're offering to these end customers? And while we still maintain a group lending structure, each of her needs are different, right, and unique. And when we think about this segment, it's not just one segment in a big whole chunk, right? It's unique segments, even within ultra micro, even within micro businesses and low income individuals, where those unique needs are changing over time and also across those different segments. And so I think it's really incredible how Amartha is specifically tapping into a lot of the data that you guys have been building over the several years of existence, but also alternative forms of data that are there, and thinking about how do we change and build that experience for different individuals based off of who they are, what their needs are. Are they a renewal customer? Are they a new customer? And I think that's a lot of the work, Roma, that you spend a lot of your day in and day out thinking about for each of these institutions. And I know you especially have had a chance to work on this renewal score initiative that Arya mentioned with the Axion Amartha partnership. But beyond even Amartha, you've also been able to work with institutions globally, looking at how do we think about the strategy in how these institutions can evolve their existing structures and some of the more traditional elements of group lending and bring access to financial services, bringing costs down for the institutions, but also improving that experience for that end customer. Yeah. And I'd love for you to kind of touch on a little bit of similar question in terms of how are the challenges that Arya mentioned that he's experiencing in Indonesia resonate with you in terms of what you're seeing in Indonesia, but also even globally as well, of working with other institutions when it comes to group lending, its rigidity. How are you seeing institutions kind of evolve that model? And especially if you can kind of touch on the data and the technology piece, right? Is how can we harness that data to build that individualized experience for that customer, where it might be that role of technology coming in, but more importantly, how are we then using that to offer these curated, customized products while still maintaining that community structure, all of the good that group lending does bring to us today. So over to you, Roma. Would love to hear from you.
Thanks, Gayatri, for this opportunity, and Arya and Pama. I'm very glad to be on this panel with Arya and Pama and get the opportunity to share some of the learnings that we've seen, not only from the exciting work that we're doing with Amartha in Indonesia, but from with what we're doing with a lot of our partners and similar themes that we see across the globe. I think that when we talk about the group lending model becoming obsolete, I think the rigidity and the inflexibility is not only from the point of view of the product offering from the customer, but how also I think sometimes in what lenders think the group lending model brings to them or the benefits of the group lending model. Traditionally, I think if you went 15, 20 years back, it was much more the guarantee and the credit guarantee, and that was the only important thing. And over the years, we've learned that there are softer aspects of the group lending model and the ecosystem that it allows you to create that should be leveraged and are important not only to the institution but also at a customer level. And so the question really is, are we thinking beyond just the utilitarian need of having that group product when it was created, versus are we now successfully leveraging what has been created for what value it can add? So yes, there is inflexibility in customers themselves as they grow within these models and grow with the institution, and their relationship with the institution grows, have more unique needs or more customized needs that they need, and then the group lending model becomes more rigid. But can we use the information that they have exhibited to the customer, that they have actually shown through their actual behavior with the customer, and why should we not think of leveraging a lot of that information to provide not only credit but going beyond credit products that they need to serve them better, get them better access, and make their lives more stable and sustainable in a sense, is the question. And I think that institutions like Amartha, I think, have already been on that path of on that evolution, or contributing to the evolution of the group lending product, bringing a less rigidity within the products themselves, allowing for a little more flexibility in how the product itself is designed. And all of that is backed by the data and the information that they are capturing on these customers, and not only that, but more, in the more digital, the more and more and increasingly more digital world that we live in, then also leveraging other information that is available on the customers to be to allow them to do that. And but having said all of that, I would say again that the group and the softer community aspects of what already exists in an ecosystem that has been built with a lot of hard work by group lending institutions across the world can now be leveraged in many other ways. We are seeing value in, when we speak about technology, technology adoption, and technology making customers' lives better. We are also seeing that the group and the community and the softer aspects of that can be leveraged to actually increase uptake of technology. Um, Customers within groups tend to feel more comfortable if they see leaders amongst their groups being able to adopt technology and being able to handhold them when it comes to using new technology. And the question really is, how do we then leverage that ecosystem that we've created and see new opportunities within that to not only provide support to the customers, to be more digital, to adopt technology faster, and really that will not be possible, I think, if you take out that entire community aspect. So I think we're seeing very, very interesting innovations in how that's done. Lastly, I think what I would like to say is that the intention of the group lending model was always for a customer to exhibit, to give them a chance for them, because we knew that if they were given a chance, they would be able to manage the credit, they would be able to exhibit good behavior, but then to use that information to actually give them more customized products, etc. And I think that graduation has been tried in various forms over a period of time, and we've seen both successes, not very many successes, but a lot of failures. And I think that when Arya is talking about using credit scoring at an individual level within a group, to be able to use that information and to be able to customize those products while keeping the group and community structure together, we are really now seeing some success in that area, which is very exciting. And not only in that area, I would again say going beyond that area and then also using all that information to find the right products. And that again, I think, ties into the larger partnerships that Arya brought up. I think one of the things that we've been very excited about when we speak to Marta and to a lot of other similar institutions across the globe is, it's not only a community relationship at a client level, but also at a macro level, at an ecosystem level. How can different kinds of financial providers get together to provide holistic experiences to customers that meet all their needs? And I'm sure that Arya and Pama would be able to add a lot more in that partnership space, where now people are realizing that everybody has their own expertise and their own strengths within that ecosystem. And there is a great opportunity to leverage those to reach out to customers at scale and to provide them with much more than credit that's going to not only allow for access, but to allow them to grow over a period of time. So I'm kind of going to stop there. And
Thank you, Roma. Thank you. No, I think that access point is absolutely key, right? And I think both of you now, Arya and Roma, have touched on how do we continue to think about access, right? And how do we think about how we're curating and enhancing our techniques, our channels, the way that we're serving these customers, because the end goal is access to these financial services, making sure they're convenient, making sure they're affordable, making sure that they're designed for that unique individual. And I know BRI has done incredible work in this space over the years. So much innovation and change has happened. You've been driving a lot of that at the institution. You've been thinking about how do we constantly, I mean, you're working with 30 million customers and they're all with different needs, right? How do we constantly focus on that access piece and on the challenges that Roma and Arya talked about, the infrastructure being in place, the role of technology? I mean, it's constantly a debate, right? The controversial theme of technology when it comes to offline communities, especially after the pandemic. We've seen a lot of the good that we can do with technology, but we've also been able to see that, is there a chance or is there a risk that this is contributing to the digital divide when we're working with this segment? And so focusing on that theme around access to financial services, but making sure that, technology is is here to stay and it's only going to continue to grow. How do you see, from your perspective, Pak Amam, sitting in BRI, the role of technology, especially when it comes to, let's say, operational risk management for group lending? How can it play to BRI's advantage? And then really, what are some of the risks and limitations of where technology maybe shouldn't play at this stage for this target segment that we're working in? Where would you say that you might draw the line to make sure that these are responsibly designed services for the communities that we work with? Sorry, Pak Amam, unfortunately, I think... Oh, there we go.
Sorry.
Yes.
Can you hear me now?
Yes,
Can you
yes.
hear me?
Yes, we can.
Okay. Thanks, Gayatri. Thanks, Paria and Buroma. And thanks for inviting me for this wonderful event this evening. Afternoon here, probably morning still in London, right? So probably I'm more than 100% or maybe 1,000% agree with what Arya already mentions about digitalizations, because there is no way serving that many customers without digitalizations. So, but still, yeah, do we all can go fully digitalized? That's the point. Probably we have a different perspective here between Amartha, Opa Arya, and BRI. Because we underwent like a research showing that yes, those underserved customers, underserved populations, they are open to new innovations, open to technology, but most of them still are based on the research that we've done. They are preferably being serviced by people, so human touching and the easy to access to bank or to financial institutions. That's also play a very big roles in the underserved community. So that's why we in BRI, instead of going fully digital, we implement the so-called the hybrid approach, where we optimize the physical capabilities that we already have and we built since back in 1895. So we are 128 years old bank now. And at the same time, so we also built and continuously building our digitalizations. So with digitalizations, yes, of course, we can serve the customers in a faster way, and we can also give them like because it is faster, then the number of customers that we can serve is much larger in number. So since 2021, so after the merge of Bank Rakyat Indonesia, PNM, and Pegadaian to form the so-called Ultra Micro Holding, we add another 6 million of the underserved community to be included in our systems. And so now we are serving about 36.8 million MSMEs across Indonesia. The challenge, like what Paria already mentioned previously, that it's impossible for them if we do it manually. So it will be too costly in terms of the usage of manpower. It would be too costly in terms of the times needed to just loan originations process. I think those can be solved by digitalizations. Uh, and again, in terms of doing the hybrid approach, Then yes, we utilize the conventional offices that we have, but at the same time we also uh, partner with the so-called drilling agents. Those are our customers, which we believe that they can also help us providing bank services to closer community. So we appoint them to be our drilling agents. So we now have close to 1 million drilling agents all over Indonesia, and that really help a lot in giving access to those underserved, and also providing us more easier ways to approach to them. So that's basically what we are doing, and we'll try to, again, what Arya mentioned previously, that we want to adopt the AI. We in Bank Rakyat Indonesia, we call it Brain. I mean, yeah, we also use AI. We also use generative AI events to make sure that the uh, how we uh, kind of get new customers, how we profile our existing customers, and they are in good conditions or not. Then with that AI, we can easily track the trust, I mean, the worthiness of the customers. So that's basically what we are doing now, and we will continue doing that in the future, because we still see there's so many possibilities right now. About 9 millions of the underserved being uh, still having no access to financial institutions, both to fintech or even to Bank Indonesia, to conventional bank.
Thank you, Pa Amam. Thank you so much. Yeah, and I think thank you for elaborating and being kind of targeted in terms of where we can use technology. It's costly to bring these customers on board. Technology can serve a great purpose when it comes to loan origination, when it comes to managing a lot of these customers. I think Roma and both of you now have touched on Arya as well on how we can use data to help better underwrite and build the risk profile of these different customers, so that we can understand who might have that ability, capacity to repay on these pieces. And then also even looking beyond financial services, right? Beyond lending. How do we bring in other types of financial services? And what is the role of that human presence, whether in BRI's case and in Martha's case as well, it's an agent network or if it's field staff, but to really bring in some of the softer aspects around working with this segment and serving this segment effectively. I think really helpful to hear some of those specific examples that you guys have touched on. And I think all three of you are quite eager to kind of dive into this last question. I know we want to open it up for the audience at some point in this session, but before we do that, I think it'd be great to kind of hear from all the panelists on this topic of collaboration and partnership, right? I think each of you are sitting within very influential institutions at the forefront of working and evolving the scoop lending practice and evolving access to financial services for this segment. And I think Amam, like you alluded, I think we're working in similar spaces, but in maybe different approaches, right? And there might be different ways a large commercial bank like BRI might be able to approach this segment versus, let's say, a more tech-first, digital-focused fintech such as a Martha coming into the segment. And Roma, I think you're sitting on both sides of the spectrum here, working with all these types of institutions. So, I mean, I'd love to hear from all of you, right? Where do you think the role of partnerships and those collaboration opportunities sit when it comes to working and driving financial services to these offline communities, to the rural communities, women micro entrepreneurs, low income individuals, et cetera? How, from a Martha's perspective and BRI's perspective and Roma models globally, do we see that opportunity there? And maybe Ariel, I'll pick on you again and have you kind of kick off from your thoughts.
Right. I think now we live in a new paradigm where collaboration is more preferred rather than competitions. So this is also true when we are talking about how us as a fintech positioning ourselves relative to the incumbent banks. Of course, fintech cannot compete with banks because fintech doesn't have our own money. We are just a facilitator. We just a platform. And that's where the first collaborations idea comes in, because typically fintech will collaborate with banks as their channeling partners, as their primary source of funds, and that is true for Amartas as well. We've been working with over 35 banks, including Bank BRI, as our channeling partners. And when we are talking about infrastructures of our transactions, of course, uh, uh, like the back end of our operations are also backed up by the banking infrastructures. For instance, because we are promoting cashless transactions, but Amarta as a fintech doesn't have a banking license, so we partner with Bank BRI, especially the brilling agent, Pak Amam, in the villages, to help our Amarta's customers to open up Bank BRI accounts, so that for Amarta, we will be able to disperse the money in cashless in real time basis, thanks to the banking infrastructure provided by Bank BRI, for instance. And then, secondly, from the other way around, for instance, Amarta work with Bank BPD and Bank BPR because they have a very limited infrastructures in terms of branch operations and also technology, credit underwriting, especially for the rural and micro enterprises. And therefore, they partner with Amarta so that even without opening up new branches, physical branches, they could be able to book ultra micro loans in their portfolio or SMEs loan in their portfolio. So these are the mutual benefit partnerships that we see, and at the end of the day, those who are most benefited are the customers, right? Because uh, on the front end, probably they get in touch with Amarta with seamless and easy user interface. But on the back end, of course, the money comes from the banks, and those are the ideal ways of leveraging each other's strength, and filling out the gaps of each other weaknesses, which eventually the benefit financial inclusions and the end user, which is the unbanked customers.
Fantastic. Thank you, Arya. Thank you. And I know that you touched quite a bit on the partnership with BRI and the work and the collaboration there. And maybe, Pak Amam, you can share a few words from your experience as well in terms of the partnerships that BRI is fostering with Amarta and also outside of Amarta as well.
Yeah. Again, thousands percent agree with what Paria already explained. I think, yeah, from the very beginnings, I mean, we know that fintech company, they will say operate fully digital, and surely with that, if they don't say collaborate with conventional banks like us, then the access of the fintech company will be so limited. So collaborations here, as Arya already mentioned, has been started, and uh, I think it should be continued in the future, or probably should be strengthened, because we know that fintech company will have limitations of in terms of the ticket size of the that customers can take from the fintech company, and probably in the future there will be another prospective customer for us. So we start from the very beginning, have these collaborations, because we know that yes, in certain way we compete, but still in certain way we have to also collaborate, because again, that might be our future customer as well, and that might be becoming our future of growth.
Yeah, that's very interesting, and I think it's very interesting as well to have kind of Arya speaking from his perspective of where Amarta can see the benefits of partnering with players like BRI, and then vice versa. But Amam,
Mm.
you saying, these are the strengths BRI can bring, and this is really where we can also benefit from collaboration. And I think both of you are saying, it's collaboration, not competition necessarily, is the way forward.
Exactly.
And Roma, I mean, from your perspective, right, you're kind of sitting on both sides of the fence because you work with players like BRI as well as a Martha. And I think there's an interesting question that popped up in the chat is where do you see from the perspective of risk sharing when it comes to collaboration between different partners within these partnership opportunities? How is that risk sharing balance, that balancing act between the two types of institutions or several types of institutions within the ecosystem coming together, especially as we look at driving better protection for consumers, that improved experience for the customers? I think Arya touched on that as well. But curious from your perspective, globally, as you're working with both types of partners.
No, I think that I think that both Pamam and Arya touched on this, right? The fact is that we are now moving away from looking at this from a competition perspective to a collaboration perspective, and risk sharing then becomes much easier. I think that banks like BRI have always been supportive of the collaboration aspect when it comes from a capital providing of capital perspective. But I think that now in this new age of collaboration, it's much more beyond just providing the capital. I think that institutions are understanding um, that they might have specific areas of expertise that can be leveraged and brought together. And if that's done in the right way, then the end customer always benefits. So it's much more finding the right fit and the right ways of collaborating from a risk sharing perspective to ensure that the customer is getting the right product. Not only is the customer getting the right product, but it's moving beyond capital, and it's moving to also the customization of the products and the ability of different kinds of institutions to bring different products to the table to give a more holistic offering to the customer to basically, in a sense, look at the needs of the customer in a much more meaningful way and trying to satisfy those needs. And I think that that collaboration aspect, and then risk sharing, I think becomes just uh, something that everybody is on board with. It's not just it's moved beyond I'm giving you my capital and this is the risk and you have to share some of the losses. It's moving beyond that, and I think that more and more this it's very heartening to see the collaboration aspect now bringing a balance there and people understanding exactly what risk they're sharing, and therefore being able to create meaningful partnerships.
Yeah, and I know, Roma, you touch on how we're really starting to see a lot of these collaborations globally showing a lot of promise, right? And I think learning from each other, learning from the failures, what's working, what's not working, and then being able to push some of this forward. So I think that's a really important piece. And then we have one more question coming in from the audience that's specifically talking about regulation. Actually, I did want to touch on this. I'm glad it came up. And regulation and the constraints that regulation can bring, but also the benefits and support that a promising regulatory infrastructure can help provide. And I think the question's more on towards Amartha and around how regulation works with Amartha. Are there constraints of operating a P2P model, Arya, that maybe is tying your guys' hands in the back, that certain elements you're not able to necessarily extend to the customer, and what impact does that happen on the customer? But I'd also like to add another twist: how is regulation actually helping you in Indonesia, given so much of the work that's happening within OJK and the Financial Services Authority there, in pushing and proliferating fintechs and the work that you want to push forward?
Yeah, as a pioneer of fintech, fintech could not operate in Indonesia without baseline regulations, right? So back in 2016, Amarta, together with other pioneers in fintech in Indonesia, together we go to the OJK, to the regulators, to educate and to share our perspective on how is the right amount of regulations, uh, which is preferable for the industries, but also preferable from the point of view of regulators, because from the point of view of the regulators, there are a certain level of comfort that they require for this new industry, this infant industry, to operate and to provide equal or fair playing fields as a new challenger in the middle of a stable market like banks, multi-finance, and other financial services in Indonesia. So back then there are a lot of debates going on, but luckily with the enactions of the first POJK or the OJK regulations 77 year 2016, we've been able to operate legally in Indonesia and complement whatever financial services existed. And I think the current regulatory, like climate in Indonesia is relatively favorable for both fintech and also the incumbent industries like banks, multi-finance, and other players. Because there are certain limitations, like Pak Amma mentioned, fintech could not lend money over 2 billion rupiah for customers in Indonesia, partly because number one, it should not compete with the banking sectors, and number two, fintechs are specifically designed to promote financial inclusions. Those who need financial access are the one who are in the lower bottom of the financial services, right? Those who cannot be served by conventional banks, those who are living in rural areas, so very micro and ultra micro who are not bankable. With the technology, credit scoring, and understanding uh, the complexity of this market, fintechs are expected to provide the solutions and to grab a niche market who are left behind by the banks. And therefore, with the presence of fintech, it could strengthen the overall ecosystems without disrupting the incumbent players like bank. And that's what happened at the moment. Uh, of course, in the future, there are many evolutions in terms of the technology, the product offerings of the fintech. But I would say that as long as the regulators are open, like now, that they always discuss with us on the progress, on the updates, on the innovations, then we should be fine. We should be getting along well with the regulators.
That's always the hope, but I think you guys are doing a great job of navigating that system. Yeah. And I think I want to thank you, all three of you. We're coming up at time, but there have been some really interesting points that you guys have all made. I mean, I think first and foremost, I think we all recognize that there's a tremendous opportunity here and a need really to start evolving some of these decades-old traditional models, start leveraging data to better underwrite, to better manage the credit risks of the profiles of the customers we're serving, to look at technology as an enabler, but being very responsible about its use, right? Understanding where its limitations are, understanding where the need to have that in-presence network and support, while also making sure that we recognize there is a strong business case for leveraging technology, especially when it comes to risk management, especially when it comes to origination, and then kind of tying that piece back together around what is the ecosystem of offerings from a more holistic perspective that we can offer to customers globally and especially in Indonesia, right? Low income individuals and micro businesses, especially women within these segments, they're very unique. They have very different preferences and needs. And how do we think about tailoring our product offerings to serve those unique needs while still maintaining that strong structure and that cohesive community that is really what helps bring and drive a lot of the growth and financial stability amongst these communities, right? And I think ultimately the end goal being building their financial resilience, building their financial health, and creating that convenient and responsible access to the financial services that they need to grow their businesses, to invest back in their households, education of their families, health, etc. And I think it's really fantastic the work that all three of you and institutions globally are doing. And personally, I'm really invested in looking at how these models are going to continue to innovate over time in new ways that we and creative solutions that we're seeing that these different institutions are bringing forward. So thank you so much, Amam, Roma, Arya. Thank you so much for joining, and thank you for the great discussion. And for the audience, thank you for tuning in. I hope you guys stay tuned in over the next few days. A lot of really great content that's pouring in on very similar topics around the globe. So thank you, everybody. And with that, we'll say good evening, good afternoon, and good morning for whoever's out there in the world.
Thank you.
Thank you, everybody. Thank you. Terima
Thanks.
kasih.
Thank you. Thank you. Terima kasih.